What's your time worth? Because if you're managing a single family property on your own, you might be working for less than minimum wage. The problem is that you spend so much time from finding the property, doing all the research, looking after all the paperwork, closing on the property, finding the property manager, managing the property manager, and then getting the late night phone calls and then doing all the accounting work as well. And so the problem is that there's so much time being spent, but the return on investment for your time isn't being factored into the overall returns. So this is going to be something that John and I are going to be breaking down today of what is the true cost and the true actual returns that you're actually getting when you are spending so much time managing an actual property on your own versus say partnering up with a group and then not spending any time on it as well. So it's a really good, we'll say, thought process to actually go through, and I think you're going to get a lot from this episode as well. Now, if you are looking for deals and you're like, yeah, you know what, I'd like to actually dip my toe in and invest with a group that has a proven track record, go to fulloutinvesting.com and you're going to find out how we run our deals and our overall process on how we're generating 20% returns for our investors and doubling their funds in 5 years while producing cash flow and being tax efficient, whether you're in Canada or the US. Go to fulloutinvesting.com. John, it's great to be here with you.
Good to be here, Mark. This is a big topic, right? And I think that it's a topic that a lot of investors miss. They actually fail to calculate what is their time worth when it comes to executing on an investment, particularly a rental property, right? And I think that, it's easy to miss because, it's like, well, I'll just buy the property, I'll keep it rented and it'll be fine. But all that time is cutting into something, right? Whether that's productivity at work or, time with your family, right? And for me, that time with my family is very important. It's very precious, right? And so this exercise, we did a lot of research, leveraging, message boards, talking with investors, whether people already investing with us or friends of ours, and just some general Google searching, right? So we're going to give ranges here, but I think this is like one of these things that if you're really thinking about investing in real estate, you need to make this decision. Is this something you want to do as a full-time job? Mark, you may know some people, but I have a friend who, over the years just grinded it out. He worked the full-time job, but then he amassed a big enough portfolio he could step away from the full-time job, became a full-time property investor. But it took him like 30 properties to get there, right? And so is that the path you're on? If you're looking to invest in one or two, what we're going to do is break down the time requirements for that and then compare it to investing in a deal like we do at Faris Capital, an apartment syndication deal. And you can make your best decision at the end of this talk, which avenue is best for you to pursue.
100%. And this is where, like, it's one thing, we're going to be going over the numbers here if it's a property in your backyard, but where it starts to rapidly start to get, we'll say, more out of hand, or more out of reach, I should say, is when you have to go invest in another market because the current market you're in is no longer an emerging market. And so when you have to jump on an airplane to go to another city to actually, check up on the property because the property manager is just doing a really poor job, or, you had renovations done and the contractor is not finishing the job, or they said they finished the job and they didn't. Your property manager is just not on the ball because they're managing 500 other properties in addition to yours. You're going to need to actually jump on a flight and go down. So that is actually becoming more and more a real thing because there's more markets that are becoming, we'll say, less of an emerging market. And so that's where, John, as you know, this is actually when it comes down to investing in real estate, we had amassed and built a strong portfolio north of Toronto and in Ontario in Canada, and it was an emerging market doing really well. You could buy cash flowing properties, and then a few years ago, it became less of an emerging market to invest in real estate. And that's when I went down the pathway of, okay, I need to invest in a new market, but I couldn't find a really great operator that I could invest in. So we actually went and built out our platform to be able to partner with investors and be that alternative for investors. But the reality is that what we're going to be going over today is probably one of the biggest hidden costs that most investors never think about. And John, you and I know that whenever we do something, we're worth a lot per hour.
Mm,
We've scaled businesses and we know our hourly worth. And I think a lot of people out there, when they're looking at doing things and they're spending time on investments, that they're not actually factoring in how much time they're putting into it, into the actual return, versus having somebody else do it, and then they can take that same time and invest. Whether it's in their business or their family or their travel or whatever it is, where they can get we'll say a higher return on fulfillment of life.
yeah,
And so this is where majority of our investors are worth a lot per hour, a lot.
that's
And
right.
so, some cases like thousands of dollars an hour. And then that's where this is going to be an eye opener. This is going to be a very solid, we'll say, paradigm shift for a lot of the listeners if if you keep an open mind. So just have an open mind. That's all we're going to ask for here, because this is something that John and we think about a lot, and it's actually been one of the main reasons for our success.
Yeah, 100%. So let's break down the real time commitment in owning a single family rental property. Now, this is over 5 years. At Faris Capital Partners, we target a 5 year exit. So we wanted to compare apples to apples in terms of time commitment with potential returns also factored in. So, initially you've got the setup, right? Finding and identifying the property, getting your financing, setting up insurance, getting all the utilities transferred over, getting your leases, building your power team, as you touched on in the intro, like identifying your closing attorney, all your vendors, and potentially contractors, right? Maybe you find an asset that needs a little TLC before you're able to rent it for maximum value. So we analyze, once again, looking at message boards, going to Bigger Pockets, Reddit, different platforms like that where real estate investors meet, talking with investors that we know personally, leveraging our own personal experience, and then just looking at some different articles we found. So we're going to give ranges here for each of these things. So, these are pretty strong, ranges, right? In other words, you could spend up to 30 to 50 hours just in the setup, right? Just identifying the property and seeing it through to closing, because you have to factor in finding the property, whether you're working with a broker or not, to identify that property. Then you have to factor in, probably likely not going to buy the first one you tour, right? You might have to tour 10, 12, 15, 16 properties to find that one that has the financial metrics that are attractive to you. And then once again, now there's the additional setup, arranging insurance, getting your loan dialed in, arranging contractors, all of those things. So 30 to 50 hours, right? So you might say,
Well,
well, gosh, sorry,
yeah,
Mark.
sorry. No. And I'm just going to add to this. There's the underwriting side of it as
Right.
well.
Yeah.
Like, this is like a big one. So underwriting and seeing is the deal. So that's when you're shopping the comparables and you're going out to the markets and you're making sure you're not in a flood zone. Like, the due diligence, the list is like very long, especially if you're doing this right. That 30 to 50 hours can be like in boom in a blink.
And it might even be more than that. It's funny, that you once again, because you likely aren't going to buy, you might have to underwrite seven or whatever to find the one, right? And so, these numbers might even be a little conservative, actually,
I
as
think
we
they
kind of
are.
talk through it together,
I
right?
think they
So,
are, but
well,
we'll be conservative. We'll be a little light here, so that it really drives a point home.
yeah, and it's interesting too. Like, I think in terms of storytelling, right? So for example, maybe you have a close friend that's investing in real estate. And you ask them about it. They're not going to tell you all the pain and the frustration and the heartache and the time spent. They're, well, I found this deal and I, closed on it. It's like what they failed to mention is this, 50 hours that they had to put into it just to get to that point, right? Then you've got ongoing, right? So once you own the deal over that 5 years, so collecting rents, dealing with maintenance calls, inspections, just general bookkeeping. Now, you may be working with a third party property manager, likely you might be. But what we found, at least in our experience, is you have to go in and check behind them. And they're often not as aggressive as you would be in finding and sourcing that right tenant. So a good operator is kind of micromanaging that process. So based on, once again, all this research, you're looking at anywhere from 175 to 325 hours spent over that 5 years, just an ongoing, resident, tenant relationship, collecting rents, maintenance calls, all those things I mentioned. Now, you also have to factor in turnover, right? And so for this exercise, we assume that you would have at least two turnovers in that 5 year period. So you might have somebody who stays for a year or two, they move out, somebody else comes in. So, maybe you keep it rented for that full 5 year period. That's possible, but likely you'll have at least one turnover. So 80 to 130 hours just dealing with cleaning, repairs, marketing, screening tenants, and all that. So That's ongoing time just dealing with the turnover. And then, you have to look at the unexpected because, one thing I've learned is, God, our man plans, God laughs, right? In other words, you're going to have some curveballs thrown your way. So it could be an emergency, a water heater breaks, a dispute about rent, or just, general lease terms, legal issues, and one that comes up a lot, contractor delays, right? In other words, you have somebody scheduled in, they don't show. Now you got to track them down. You got to go to the property, make sure all the work's done correctly and to your satisfaction, doing that punch out list, etc. So we've estimated the unexpected to be somewhere between 50 to 100 hours over that 5-year period. So we're looking at somewhere in total between 335 to 605 hours of time just managing, sourcing, managing, dealing with turnover and those unexpected delays. So the way I view that, Mark, that's basically a part-time job, whether you realize it or not.
This is like 2 hours a week is easily dropped on that property. When you do that analysis outside of the acquisition, easy, easy 2 hours. That's like 2 hours a week. You can easily drop that in with like all of a sudden you got a phone call. And not only that, like the things that aren't being factored is the amount of think time that you're spending when you're like, I'm not really working, but you're thinking about it. Where you could be thinking about building a new business. You could be thinking about your business that
Yeah,
you're building. You could be thinking about how am I gonna, maximize, savings to be able to, put more to my bottom line, or how can I be more efficient with my taxes, or, how can I build another skill set? And you could be thinking about that,
right.
all of your think time as well. So I did the analysis, 2 hours a week based on being on the high end of the spectrum, but I think that can be. I think this is even the high end of the spectrum. I think is really really conservative. I think that it's actually more than that,
Yeah.
especially if something goes wrong,
Well,
and
that's it. Yeah.
that's a big one, right?
Well, that's what I was going to say. You made such a good point because, imagine a scenario where your tenant, is not paying rent and you realize, maybe you bought in a market with, eviction challenges. In other words, it might take you 6 to 8 months to get that person out. Now your asset is sitting there collecting no income. And, likely they're also doing damage to the property. I mean, and, it doesn't happen often, but I've heard the horror stories, right? Where the tenant just trashes the place on the way out the door. In fact, I actually worked with a seller when I was still selling residential real estate, and they were out of state and they had owned the home, but it was during the Great Recession. So they held on to it, rented it. And they said, John, I've done some deals with them in the past. Can you go out there and check on this place for us? So I drive out to the property and I walk up, and the front door is open and the back door is open. And I'm just like, oh gosh, what am I walking into? The place was just completely destroyed. I mean, they tore up the formica. I mean, literally just peeling the formica off the countertops, ripped off cabinet doors. But as I mentioned, the doors were wide open for how long? I don't know. Right. And you just think about that. I mean, pests could get in, animals, all kinds of things. And calling that seller up and just hearing their heart break, like literally when I called them, it was just, I mean, my heart broke for them. And so these are extreme circumstances, right? I mean, these aren't necessarily things that happen all the time, but they can happen. And so imagine what that does to your psychology, right? When you're going into a big board meeting or a presentation
Yeah,
and that's
big
kind of
time.
hanging over your head, right? And that decision accuracy will be impacted by that, right? And so, I think about guys like Steve Jobs, who are obviously on the extreme end of the spectrum, who just try to limit any decision making choices they had to make on a daily basis while he wore the same clothes, simplify your life. And I think about that a lot because at Mark Spain Real Estate, my business partner and I, Mark Spain, all we focused on was Mark Spain Real Estate. We weren't running around flipping houses or doing all this other stuff.
Yeah.
And we built this incredible company that was able to sell and then provide wealth for our family that now allows me to invest. So it's that idea of really focusing on fewer things in your life, is, in my opinion, the quickest way to finding success, right? So yeah, we haven't even calculated sort of just the stress factor and how that impacts other areas of your life here. This is just a true time cost, but these other factors to consider as well.
100%. And one more thing to add before we look at the alternative side, the passive side, and what that actually looks like from a time standpoint. But if you go through a bad experience with the tenant and you're the one looking after it, because even you might say, I'm going to get a property manager to look after it, boots on the ground. Well, unless you're running like a 100 unit apartment building, like Like, these are the assets that we're buying. We can afford, because they're larger assets, to have full-time property manager there, leasing agent, and maintenance tech on the property. So they're going to look after the property a lot better than a property manager that is managing your property and maybe 500 others. And I've experienced this myself. Is like, you can't expect somebody to be managing your property as well as somebody that's on property on site.
Right.
And so I've heard the stories, not only with the renovations going on, especially if you're out of town and you're not keeping an eye on it, but even the like finding a really good property manager that actually cares and does a really good job is very, very rare. But even if they're really good, they're managing 500 different properties in different locations all around the area. So like, how on the ball are they going to be watching, and generally with those as well, you're not getting the big national companies that have processes and systems and procedures. Generally, it's more of kind of a smaller mom and pop property manager. Generally, with the smaller. So, but you might be able to find somebody really good. Okay, let's just say you do find somebody really good. They're managing. Maybe they live close by and they're taking care of it, like you, the owner, but majority of times they don't. So if you don't have a really good experience, then that could actually get you out of real estate investing altogether. And that is probably going to be your biggest cost, is if you get out of real estate and you're like, because I've heard that so many times, John, through the years of, I'm just done with managing. I'm done with real estate. I'm done with managing. I just don't want to do it anymore. This tenant just wrecked it for me because, they were, ripping up from my countertops, like you had said,
Yeah,
right?
that's
And
right.
I'm done with it because it's very personal for them, right? And so that is probably one of the biggest costs by trying to do it on your own when you're not doing it professionally or doing it part time, is because it can actually get you out of it. And by doing that over the long run, you'll look back, and most people do look back when one of the regrets they have is, I wish I would have bought more. So you want to be able to play the game long term and make sure that you don't get out of the game. And by doing it on your own, it actually increases the probabilities and chances that you're going to get knocked out of the game altogether.
That's right. So let's look at the passive alternative, which is what we do here at Ferris Capital Partners, where you can buy a share in a large 100 unit plus apartment building. And you mentioned some, things there that just make them more attractive in general, right? The on-site professional management, the idea that in our underwriting, we're actually factoring in a certain percentage of delinquency and potentially, evictions that may occur, right? Where somebody may not pay. Now, of course, we only buy in markets with strong landlord friendly laws in place so we can get a non paying resident out quickly. Now, I will say, just to pause on that, we usually start with a payment plan because we know life happens. And there have been circumstances where maybe it's a working family and one spouse loses their job. And we create a payment plan and they get caught back up and everything's great. So that genuine love of people is factored in. But looking at the time requirement, at the end of the day, when you're sort of deciding what kind of investment or which operator you're going to invest with, you're probably looking at maybe around 5 hours of upfront, just reviewing the materials, asking some questions, reviewing the contract, executing the paperwork and funding the deal, right? So you may spend a little more time. Maybe it's your first deal and you want an attorney to look at the documents. That makes sense. A lot of our investors do that. But generally, it's about 5 hours of time commitment, right? Just to review the offering memorandum, the contracts, the documents, and look at the deal deck, right? Make a good decision there. So much better than that, 30 to 60 hours or that 30 to 50 hours in terms of identifying and selecting and closing on an investment. And then ongoing, this is where the real magic happens. And we're talking about like maybe like less than an hour a month. I mean, and that's really, if you're really studying our monthly updates, we send those out on the 30th of every month guaranteed. So we include the rent premium that we've accomplished on our renovated units. We have some good news. Any challenges that may have occurred, challenges always come up. Some positive reviews we've received recently. And then on a quarterly basis, we have a deeper update with some market commentary. So if you look at the course of a year, I mean, maybe 30 minutes to an hour a month. And that just depends on how deeply you're studying the materials. And of course, your distributions are just getting direct deposited right into your bank account on a regular basis alongside those updates. And best part, no tenant calls, no maintenance issues, like no turnover concerns or challenges. You just get that, mailbox money in your bank account and you review those updates. And that's really it. That's your commitment. Now, on our side, we're always happy to jump on a call should you have any questions or want to talk through something. We're available. But it just goes back to once you invest that first 5 hours, you're talking about 20, 30 minutes, maybe an hour a month. And that just depends on how deeply you're wanting to review these materials. So once again, no tenant calls, no maintenance, no turnovers. Instead, you get monthly distributions, quarterly check-in calls, tax documents delivered on time, and a team of professionals managing every aspect of the deal.
Yeah, it's very attractive. And the biggest thing that we're hearing from a lot of our high net worth, and there are investors, John, as you know, like they're entrepreneurs, they're doctors, they're dentists, these are lawyers. These are people that are the top of their industry, what they do. And they're worth a lot per hour, and they're making impact in the world as well. And so what they really like is that we're treating this as a business, and the communication that's coming through to them is at the high standard of which they appreciate. And so we're running the deals, we're running them where they're not looking at them saying, I wish you would be running it like this and this. Is like, John, you and I, we built very successful businesses before this, and the team that we've gone and built out and recruited, overall the team will go toe to toe with any other operator out there on how we're finding them and then operating these properties as well, which our investors really like. So it gives them a lot of peace of mind. But that newsletter that we send out, I'll tell you, it is one of the best things. It's like what the previous rents were. Here's a unit apartment number. Here's the previous rents. Here's the new rents that we're getting. It's like, oh geez, there's like three, four, $500 rent lift per month is what we're getting. And then we actually show, here's what it adds to the overall net operating income on an annual basis, and the overall, we'll say, projected increase in value in the long term as well. But John, let's get to the fun part. Let's get to the, what does this actually mean if you say, you look into a partnership and you want an equity position and you want to come in and partner with a group like us, but even any other group as well. If we were to kind of look at this, you just want to make sure you get with the right group as well that's going to run it well. But what does this actually mean to the investors from a dollar perspective? We're talking about hours, but bottom line, dollars in people's pockets, I think, are most important. So that, John, you want to break down the examples? That this
Yeah,
is the fun part of the podcast here.
that's
You
right.
want to
So
share it?
you'll remember when we talked about self-managing, you're looking at anywhere from 335 to 605 hours over a 5-year period. So we went down and we looked at sort of some average incomes, just or I shouldn't say average, but some income levels, right? And so because you have to be an accredited investor in order to invest in these, we started with 250,000 in annual income. So looking at a 50-year work week, taking into account federal holidays and things of that nature, you're worth about approximately $130 an hour working a full-time job, right? So on an annual basis, if you're self-managing a property, what that ends up looking like with the time commitment that you'll need to put into this is anywhere between $8,700 and $15,800 over a 5-year period, 43,000 and change, or 78,000. So if you're on the high end of that, $78,000 in your time went into that investment over that 5-year period. So if in that 5 years your return is only $60,000, you're actually in the red, right? On the low end, 43,000. Now, if your income is $500,000 a year, using that same methodology, that's $260 an hour. Self-managing a property, that's 17.5 all the way up to a potential 31.5, $31,500, to say it more clearly, in foregone value from your time spent over 5 years. Mark, 87,000, upwards of 157,000 if you're on the higher end of that time commitment spent on that particular investment. And if you're in a million in income, you're earning about $520 an hour, self-managing it over that year, losing anywhere between 34,000 and 63,000 in lost value over 5 years. Watch this, 175,000, upwards on the high end to $315,000,
Wow,
right?
huge.
I mean, if that doesn't wake you up, I don't know what would.
That's real, man. That's a real number. Those are real, and these are conservative for hours. This is what's actually factored in. Like inflation is a hidden tax. This is also a hidden tax of what you're worth per hour that you're putting in by managing it on your own. And so these are real things you got to look at. If you really want to be more productive, you're spending your hours somewhere, right? you're spending them somewhere. You want to make sure that they're being put in areas that are giving you better returns. So you might be actually spending that time, $315,000 over 5 years. You need to get a frigging killer return. Like if we're doubling money in every 5 years with potential of further upside than that, you need to be like, geez, you got to be getting like 40, 50. You got to be doubling your money to be able to make it worth your while and on big deals as well. Not like if you're doing smaller deals and you're doing it all on your own, you could be doubling your money, but you're still losing because
Mhm.
the time that you're spending. You need to be doing bigger deals, and you need to be getting high returns to be able to make your return on investment on your time to so that the overall net return that you're getting is worth your while. And you got to really look at that when you're making decisions. Should I be investing here or not?
Yeah, and to take it further, right? I mean, so for me, when I think about investing, I'm thinking about creating wealth and freedom, right? So freedom for me is, having money so I don't have to worry about it, right? And so not becoming a property manager. That's not one of my goals. My goals is to build wealth for my family and myself and to attain that freedom, right? And when limited partners invest in deals like we do, it just scales much faster, right? Because your time commitment doesn't increase with more units. So that could look like, maybe you invest in a 100-unit building or a 300-unit building and you're getting the returns, commensurate with that larger deal, but it doesn't take you any more time. Where, for example, if you owned a quadruplex or something like that, that's four different, residents or tenants that you're going to have to manage, right? So you can scale up much quicker. And once again, because we're only estimating, maybe say 20 hours over the life of an investment when you do a passive investment, you could do many of those and still be way in the money as compared to owning a single family. And when you invest passively, you still get all the benefits of ownership, right? So the cash flow, the appreciation, and then, of course, the tax advantages that come with real estate, depreciation being the main one for Canadian investors. So, it's not to say there's no room for those single family investments, right? And maybe you're at a point in your career where you're, retiring and you're like, this will be something fun I can do in retirement. Like I know investors just like that, and they like to keep busy and they have their own little portfolio they built. Certainly nothing wrong with that, but for me, my full-time job is my work, right? And I don't want a second full-time job, right? I've got a family and I want to prioritize the ability to travel and go to soccer games and volleyball games on weekends and not be, painting a living room because the previous tenant tore it up. And that's actually something we didn't talk about, is that the most savvy investors that invest in single family rental put sweat equity into their deals, right? Because they're trying to maximize their returns. So, they are doing some of the work at the property where they can. And so, these things have to be factored in. So for us at Ferris Capital, we just simplified the whole process, right? You're getting your monthly distribution starting in month 3 to 4, generally month 3. So that's passive income coming in. That's return of capital. So it's tax advantage until we exit. Communication guarantee, I already mentioned. So you don't have to like wonder what's happening. Just on the 30th of every month, you're going to get a robust update, and on a quarterly basis, an even more robust update. You got a professional management team handling all the renovations, leasing, operations. And, it's a small thing, but a big thing. You're getting your tax slips on time every year. So you're not worried about accounting or getting with your property management company, like, where's my, returns? I need to file my taxes. It's all handled for you. So in effect, it's basically a completely hands-off experience.
Yeah, and the cross-border side of it is really big. If you're a Canadian looking to invest in the US, you don't have to do the cross-border structure where you're having to pay your accountant extra. Like this is actually, I spoke with one doctor who had been investing with another operator, and he was a Canadian, and he was investing in a US deal, and so he actually had to create a US entity to invest into it. And he said doing those taxes, the cross-border taxes, he said, and I quote, "It's the bane of my existence." These are not my words, these are his words. It's the bane of my existence. And so when I was telling him about our structure, he's like, "Oh, that's amazing." Right? And so because we have a full-time CPA on staff, like there's no way that, one person can kind of do it all and manage it. You need a team in order to do it right and in order to do it on time. You need full-time people doing it that have the time to do it and the expertise to be able to deliver. So the tax slabs are, I'll just say, like, and all the accounting and the distributions and the ongoing communication and the updates and everything. Like we put a lot of time And even like with the guarantee that we offer, John, like there's internal stress when the 30th day is coming up of the month for us, right? It's like when I say internal stress on our side, where investors, they just kind of get to kick back and wait for it. And then they get that update, but internally, it's like it's one thing to do it 1 month, it's another thing to do it 2, 3, but then doing it year after year consistently, on time, professionally, like, you need to have a well-oiled machine, and there needs to be urgency and priority to make sure that you're delivering on that. But that kind of experience is something that is worth a lot, where if you're, say, doing it on your own, you gotta be calling down to the property manager and having those phone calls as well, and then is it really true or not what's being said, and then that's when you got to get hopefully boots on the ground people that are going taking pictures for you, but then you're communicating there as well to get the full update as well. So I'll just say that that has been like a major benefit, and time, will say, release for our investors.
Well, and to build on that, because actually I just sort of thought of this, although it's occurred to me before, but you reminded me of this idea that, I'm invested in a few deals where I get quarterly, and then I've got one where they're pretty hit or miss. Like I get quarterly sometimes, but not all the time. And thankfully, when I get the updates, things seem to be going well. But because we send those monthly, Mark, it's almost like this force multiplier in a sense within the company where it basically makes us you know, operate the deals in such a way where we're creating good news, right? So, for example, if I send an update and then the second update, well, we didn't really lease anything and we didn't really get any renovations done or no capex occurred or whatever, like that looks bad, right? So it's like this idea of just like
Right.
constant improvement. Like every month we got to send
Yeah.
something, we got to make a move and like get us further to the
That's
goal,
good.
right?
Yeah, that is good. I didn't think of that either. It's
Yeah.
like, yeah, because you got to have good news, so you got to go create good
Create
news.
some good news, right?
Yeah,
That's right. Yeah,
right.
do the work and
Coming
make
up.
sure that you deliver, right? So, it's you mentioned the stress. It's funny. So, obviously I manage that process and you're a big part of it as well. But, we start working them on, around the 15th of the month and there's many revisions back and forth. And, but it's funny. Like I remember one, I think it was the first time the 30th was like on a Sunday and I knew they were ready to roll, but like, you just, what if it doesn't send? And so, because it's automated, right? We build it out and it's triggered to go out at a certain time. And I remember on Monday, I was like, yeah, I was texting Shristi, making sure. And she's like, oh, I was too, And so it's just that's the level of commitment we have to getting those out. It's like any day. And so I have a reminder on my phone every 30th of the month. It's like at 1 p.m., make sure they're on track to go out. Don't miss it. But yeah, that internal, kind of pressure we put on ourselves to make sure we're moving things along so we have good news to share, creating that good news in a sense. So yeah, I would just say if you're listening to this and you're contemplating, and buying, a single family property to rent, or maybe you've already done it, like maybe it's a little homework, like go and run an analysis and what is your time worth? Like what kind of income do you make? Calculate that out and then use that number, that 305, what is it, 330 to 605 hours, and then is that time worth it to you? And if the answer is no, then perhaps you should be looking for a company like Faris Capital Partners that can do it for you while still delivering all the upside, the cash flow, the appreciation, and the tax advantages.
Yeah, yeah. If you want to save hundreds of thousands, just factor that into the returns. Do the analysis as to if you see X is what the deal is penciling out to when you're doing your underwriting. This is where I think it can be. Just factor that in, and then you're going to make a much better decision because then you're considering everything at the end of the day. So hopefully this is helpful, guys. Hopefully this makes you look at deals a little differently in a more educated and a little bit more, we'll say, wisdom in making those decisions as well. And whatever you decide at the end of the day is that's great. But having all the information to be able to make those wise decisions, I think, is really important. So just factoring this in on your decisions, I think, will help you moving forward. So thanks for listening, guys. Really appreciate you listening to the show. If you enjoyed it, you can go ahead and share with somebody else, another high net worth investor that you think will benefit from it. That's maybe not factoring in their own time on their decisions when they're purchasing, and they'll get to benefit from that. So thanks for tuning in to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.